love to start with you. And you actively work with startups, with investment, and you're actively involved with the entire community. And this pandemic has affected global markets and investments far and wide. How has the situation affected the way VCs engage with early stage startups, and how is it affecting potential investment opportunities in New York?
Yeah, sure. I think I would have answered that question differently depending on the week over the last 3 months. I think we've seen this period, which I would say from March to the second half of April, where most VCs were doing portfolio triage, just trying to figure out who immediately needs money, who had a round that was about to happen that fell apart, whose businesses are affected in what ways, just kind of an immediate stop the bleeding kind of approach, right? The heavy lifting for that work is mostly done by founders. Ultimately, you join in, you provide your feedback on a board, but ultimately founders are doing most of that really difficult work. And sometimes it meant layoffs, other times it meant for applying for various programs. But there came a point, I think, in probably the beginning of May, where plans were in motion, right? And there was this period of time where I'm not entirely sure that VCs were quite comfortable sort of going back to normal, full speed ahead, but at the same time didn't have a lot of portfolio work to do. And so you started to see VCs reaching out to companies maybe that they were interested in last year but didn't quite get there. Might look at rounds that maybe at a discount to where they were, right? If you looked at a company in December and you thought it was too expensive, you might go back to that company and say, hey, did you ever complete that round? Are you still looking for money? And they're sort of, kind of deal sniffing. I think now you're still seeing this sort of flight to quality and trying to figure out, well, what can I get at a reasonable price that seems, relatively quarantine or recession resistant in a very, very careful way. Not a lot of new deals, but and frankly, fewer companies pitching. I think to the extent that they can, companies have moved their pitches later to try and avoid fundraising during this period if possible. And that's something, just as a final point, I would say may not be the best strategy. If it's almost like looking for a parking space, right? You never think you're going to get a parking space right in front of the place. But if everybody thinks that, no one looks there, right? And sometimes you find that perfect spot. And so if you think that this is a terrible time to pitch and everybody else thinks that, it might not be a bad time to start a conversation. Keep in mind that it does take 2, 3, 4, 5 conversations maybe to get somebody over the hump, and that might take even longer now. But I do think there's a window to build relationships and connect with investors in a way that was definitely closed in March and April, and might be pretty crowded come September and October.
Definitely. So now would be a good time to start having those conversations in preparation for, having the more deeper, deep dives with the potential investor in the next couple months. So that's what you're saying?
Sure. And who knows, you might find someone who is ready to write a check now. I just gave out my first fully coronavirus quarantine term sheet, a team that I had not met in person. They are out looking at other VCs to fill out the round. And we'll see how those conversations go. But that was done probably 2 weeks ago.
Great. thank you so much for just sharing, what we should be expecting and how startups really should be proceeding with this.